Okay, let's welcome on board Deven Choksey as well. Deven, hi, afternoon. Good to be speaking with you. What's the sense that you're getting about IT performance, firstly, given that this week we're going to officially be kickstarting the earnings?
Well, yeah, good afternoon, Aisha. Earnings definitely getting started this week, and the most important part of this earnings season would be the commentary which the IT majors are likely to provide for 2025. As we see it in 2025, the major theme going forward would be the adoption of AI by the clients of most of the IT companies, and whether that does mean giving or getting higher amount of contracts from those customers is an important thing to watch out for. Currently, the situation remains quite balanced as I see it. On one side, there is a good amount of prospects available for getting into some of the larger orders. On the other side, I think the challenge also persists about the implementation of AI in coding. So, to a greater extent, the companies, whether they shift from coding to computing, is something which we require to understand from many of the managements. As such, we believe that mid-tier engineering R&D companies are likely to be major beneficiary of this entire move because they cater to the niche customer segments and their requirements. So, from that perspective, compared to their large cap peers, the mid-sized companies could possibly be relatively a better choice in my viewpoint, and that's what we would like to understand in detail with the earnings season starting now.
Point taken. Kunal, what's the sense on the charts of an India Mart and a BSC? India Mart is reacting, of course, to that upgrade coming in from GEM Financial, if I have it right, and BSC has been powering ahead.
Yeah, I think BSE is, of course, one of the more attractive charts on the long-term basis. From 2400 mid of 2024, I think rather in the second half of 2024, the stock had moved towards almost 5,500, 600 levels for BSE, and the stock in the last few days has come back towards retesting of its long-term moving average as well as the 50 DMA. So I think at current levels, this could be an attractive risk-reward point for traders who are looking at a buy on BSE. My sense is that if this leg of up move sustains, then we could be looking at the stock hitting back towards the previous highs of 5800 plus levels. India Mart could be an interesting case. The stock is down yet again almost 15% below its long-term moving averages. So I think the longer-term moving average for India Mart is placed almost at 2700, 2600 thereabouts, which means that there could be a potential significant upside into the stock price. So again, more of a contrarian perspective for someone who's looking at a high risk trade over here. I think then India Mart could be a good buy at current levels with a potential target range in the range of 2500 to 2700.
Right, okay, that's the take coming in on both those buzzing names, BSC as well as India Mart. But Deven, what is your own sense? While it seems like a great structural story and it's played out for over a year now, the capital markets that is, but do you think after the run-up as well, any of these names, CDSL, CAMS, BSC, MCX, do they make for a buy?
So the current buy argument is largely tilted towards the requirement of the funds to invest into some of the market intermediaries. Also considering the fact that you don't have the large position created because of the regulatory restrictions in these companies. So obviously, I think the multiple number of investors would try and take the position into these companies, given the kind of growth that we are talking about. BSE in particular, I think looks relatively more comfortable because it has a more headroom to score. Probably, I think both in the area of the transaction charges that it recovers from the investors ultimately, and also from the point of view of data selling, which is also contributing apart from the listing income that they get due to the new IPOs, etc. So all in all put together, I think there is a pace or there is a story which is I think remaining absolutely firm and clear. Currently, everything is in price. But as I explained, probably I think the demand for the stock is largely because of the requirement of the investors to add this kind of companies in the portfolio. You don't get commonly this particular business is available in any market of the world. So wherever they are, probably I think investors would like to keep those portfolios intact and stay invested in them.
Let's get back to markets. A lot of triggers in the pipeline, clearly, and I think Delhi this time is going to be a very important and critical state election as well. But other than that, for the markets, it's going to be all about earnings, which kickstart, then, of course, the budget, and then you clearly have the tele polls as well. Right now, it's only IT which is under pressure. You are seeing some pressure on a trend as well. It's been a rough one for this one of late. There's also iShare, which is currently down, but then again, the spike up in the stock after its monthly sales data also has been quite significant. HDFC Bank, a choppy ride today, but is finally settled in quiet around those 17, 19 odd levels. Deven, within private banks, what's your bias and preference right now?
So I think we continue to like the underlying assumption of retail lending, giving a steady pace of growth to most of the corporate lenders, corporate banks. I think who are Kotaks of the world, or for that matter, ICICI, Axis, and DFC. Their retail lending book is continuing to remain, I think, on a steadier wicket, as I call it as. So, from a perspective of looking at the corporate loan book, I believe that typically the corporates would come in when the interest rate scenario is subdued. I think they will not jump into it. They will use capital market to fund whatever the projects that they have at this point of time by way of raising money from the stronger equity market. But the debt part of the borrowing, if they have to resort to from the bank, I think that necessarily the cost of fund will have to come down systematically. At this point of time, we like the underlying strength in Kotak per se. We like underlying strength in ICICI. And we believe that both these banks are technologically also very well geared up for handling both the expansion of the activity or reach to the customer and managing the NPS in a systematic manner. So I think selective buying in these companies will definitely prefer. Apart from that, the larger NBFCs like Bajaj Finance and for that matter even housing finance business of Bajaj Housing Finance, they look really appealing to us from the investment point of view of the long term.
Okay, that's the take coming in on some of the NBFCs at this point of time. Separately, some of the chemical companies are spiking up. UPL has had a good day. RCF is something which is in focus. GNFC was the one which is perking up. You also have Arjun Chemical, which is up almost 2% in the last few minutes itself. So some of these stocks are definitely perking up as we speak. Naresh, anything within the chemical basket that you would like?
Not really. We could see some bit of a bounce back in a lot of these names because they've corrected. Say, Deepak Nitrite has corrected from 3100 to 2400. So there could be a little bit of a bounce back, but tough to trade these names. Same is the case with Navin Fluorine, which has been trying to form a base and has been down for the last almost 2 years. But tough to make a trade here. But Navin Fluorine is what would be interesting because it has made multiple bottoms around the 30 to 15.
Right, okay, that's some of the chemical plays which are looking buoyant. Zomato, though, down 4.5%. Deven, just wanted your own sense. I mean, while brokerages have flagged off that in the near term, perhaps quick commerce could get more, competitive and that could only intensify, and the medium term profitability perhaps could get challenged because of higher discounting. But do you think a decline on Zomato, even today at 250 thereabouts, could be a good add?
Not really. Honestly, I think we have been very vocal about this particular aspect that on one side, we believe that the quick commerce and related businesses that Zomato, Swiggy's have created, they remain relatively stronger proposition from the consumer point of view who is consuming on this platform. But more importantly, when it comes to investment, I think both these companies put together would command a market capitalization of around 1 lakh, 4 lakh crore plus. And that is not comforting to me because Swiggy is still yet to come into profit. Zomato is partly into profit already, but at the same time, everything is in price. Unless you have meaningful amount of profit growth to sustain this kind of market capitalization, I don't think that I think one would be in a hurry to buy this stock at current prices. Though the business will continue to grow, but still, I think to produce that kind of profit which justifies the market capitalization, I think we are far, far, far away from that situation.
That's the take coming in as far as that stock is concerned. But Aegis Logistics has been doing quite well for itself. India Mart, as we pointed out, Amber Enterprises, First Source, NCC. These are some of the stocks that are actually doing quite well. What's the sense, Deven, when it comes to the entire PSU basket? Because those stocks had fallen off the radar, but as we're inching closer to the budget season, do you anticipate a pickup?
Anisha, if budget basically lays down the roadmap to further consolidate PSU banks in particular, then it would be a great thing to look out for. Because in the first round of consolidation, I think they have indeed succeeded by creating the fewer entities out of too many. And now, if they end up creating, I think, even a smaller number of entities, but with a larger size through this consolidation program, then public sector banks could be probably, I think, we looked at very interestingly. Unless I think the size of the bank is created, probably I think the lending book which country needs, I think on an expanded economy, would not be available. And that's where probably the argument is that I think this can be a time that in budget or maybe after budget, there will be some kind of a roadmap laid down for the consolidation of the public sector banks. Apart from that, other PSUs, I think in the different areas which they are catering to, I believe that I think they are currently holding at a price at which I think they're fairly valued. I don't think that any of the defense-oriented PSUs or even manufacturing-oriented PSUs are available cheap at this point of time. So always, I think the growth will have to be looked at if at all I think one wants to buy first at the current valuation. In my viewpoint, I think we have to wait a while before buying these companies, though they may offer a significantly large amount of business growth going forward. But it seems that everything is in price at this point of time.
Okay, so that's a take coming in as far as PSU banks are concerned. But for the markets right now, holding on, it's pretty sideways. There haven't been any big, movers in the last few minutes as such. But Reliance is something which is actually managing to hold on, and almost a 2% gain coming in there. Kunal, any indications of a breakout, or would you buy Reliance or just stay away?
Just stay away, maybe a wait and watch for Reliance as of now, because even after the last 1 month of a bit of a drag for the stock, because I think a month back the stock had made a low which was around the 1215, 1217 mark. The recent low for the stock was just around the 1200 levels. So it's not as if the stock is falling very sharply, but the stock is going through a drag. The volumes have dropped down significantly for Reliance Industries. So we look out for two signs. One is either the volumes start to improve significantly and the prices start to show signs of relative strength, or at least some bit of relative outperformance, especially at a time when the indices generally are under pressure for a few days. Or on the other hand, we look out for a point when the stock starts to confirm a swing breakout, even though on the short-term charts. That's generally the first indication that the strength is coming back into the stock price. As of now, we are not seeing either of the signs coming back on the positive side for Reliance Industries. The first initial level of a breakout on the upside for the stock is around the 1260, 1270 mark. So we wait out for a point where either the volumes start to improve or the stock breaks past about this 1260, 1270 barrier to go for a buy on Reliance.
Okay, Reliance, stay away or just wait out. That's the view coming in. Time now for a quick break. But as we do that, Deven, we let you go. Thanks so much for making time. And let's quickly take the closing trades as well. Nuresh, what's the closing trade idea?
So that's a buy on Reliance Industries, a risk reward trade here. 3 times the stock has been trying to form a bottom around 1210, 1220 levels. So if it holds above these levels, we could be setting up for a recovery out on this one.
Kunal, what's your recommendation?
I'll go with a buy on RBL Bank, and I think for the first time in the last 2 to 3 weeks, we're seeing the volumes being almost 1.5 times higher for the stock, and it's formed a double bottom for itself just about that 160 odd mark. So it looks attractive at current levels of 165, 168.
Okay, RBL Bank looks interesting. Time for a quick break, and we'll be right back with the last 30 minutes of the trading session.